there will always be opportunities if you're not working with large amounts of money. The money manager, there's a basic conflict. There's conflicts in most businesses. Everybody's pointing out the conflicts now in the investment banking business, but the investment management business has a conflict that's equally as significant in the fact that asset gathering can become a way more important part of your income than asset managing. But if you manage moderate sums of money, I think there will always be opportunities to overperform. That doesn't mean lots of people are going to do it, but they will be out there. And it might have been easier many years ago when there were fewer people looking and not as much information was available on the internet and all that. But people still make the same mistakes, and they still get, well, I'll give you an illustration. Charlie has a company called the Daily Journal Company. Called the Daily Journal Company. And the Daily Journal Company has a bunch of cash. And it sat there with cash, and it sat there with cash. And I own 100 shares, which is all he'll let me own. And I got their annual report here a while back, and in their fiscal year of 2009, they never bought stocks before that I'd seen. And all of a sudden they bought $15 million worth of stocks, and they were worth $45 million. So by sitting around for a while, but waiting until things got really ridiculous in certain cases, he put $15 million out that became $45 million within probably a 6-month period or so. So opportunities come around. You have to be prepared to grab them when they come. And you can't do it with the kind of money. You can't get the extraordinary things with the kind of money that we're running. With moderate amounts of money, I think there will always be opportunities. Charlie's going to tell you something more pessimistic now, probably.
Well, yes, one piece of advice that Warren frequently gives, and it's particularly useful to those going into money management: take the high road. It's far less crowded.
Yeah, Alan Simpson used to say, he said, those who take the high road in Washington are seldom bothered by heavy traffic. But getting to the last part of your question, there's going to be opportunities for talent, whether it's in money management, operating management, whatever. I mean, it's going to work. Money management, it's easier to scale up and easier to get into and all of that. So it was sort of my natural inclination in any event. I would not have wanted to work my way up to a plant superintendent and all that until I got a job at the top, about the time they were going to give me a gold watch. But there's opportunities in both places.
What qualities are you especially looking for, and what do I have to do to become your successor?
Probably shoot me. The managers of our subsidiaries hire their own people. The number of decisions I have to make about managers are really, really few. As I mentioned earlier, they do send me a letter that if something happens to them, gives me their ideas about who should succeed them. But I make no decisions about who gets hired at GEICO or Burlington or Mid-American or anything of the sort. I mean, if they need a CFO, they go out and hire a CFO. Or if they need somebody to run a plant, they go out and hire them themselves. They are responsible for their operations. And occasionally, we have a death, we have occasional, very occasional, I can't even hardly think of one, resignation. And at that point, I have to make a decision about who should be put in charge of the operation. But I don't think I've had more than 10 or 12 of those in 45 years. So I'm not a very good employment agency. We have 21 people, I think it is, at headquarters, and I made a terrific hire here a few months ago. But that'll take care of me for 4 or 5 years. Charlie?
Yeah, there's no indication we'd be particularly good at it either.
No, I wasn't going to mention that. But I would say this, if you want, what is interesting to me is that when you find somebody outstanding, boy, do they jump out. I mean, somebody that is thinking about the place the right way, is working extra hard, whatever it may be. You don't have that much competition in this world. In terms of generally advancing within organizations, I think you'd be surprised at how little competition you really have if you start thinking like you would if you were an owner of the place and working like you would if you were an owner of the place. And
what useful function do derivatives serve in our economy? We got along quite well without them for many years. If they serve no useful purpose and in fact have demonstrated that they can do considerable damage to the economy, why are they not made illegal, especially the naked ones? There is precedent for that. I believe that short selling of stocks that one does not own or has borrowed or has managed to borrow is illegal.
Charlie he can get worked up more on this than I can, so I'm going to let him answer that.
Well, I think the usefulness of derivatives has always been overrated. If we didn't have any derivatives at all, including contracts to buy and sell grain that were traded on exchanges, we'd still have plenty of oats and wheat. I mean, I think it is slightly more convenient for people to be able to hedge their risks of farming by using derivative markets and commodities. And the test is not, is there any benefit in derivatives? The question is the net benefit versus disadvantage from derivatives useful, or would we be better off without it? My own view is that if we went back to having nothing but derivative trading and commodities, metals, currencies, safely conducted under responsible rules, and all other derivatives contracts vanished from the earth, it would be a better place.
Yeah. We'll take a current example. Burlington Northern has hedged diesel fuel, which they use a lot of, over the years. And then they also have fuel adjustment clauses in a lot of their contracts for transportation. With Matt Rose, does a wonderful job of running Burlington. I basically say, look, if I were running the place, I wouldn't bother to hedge it, because if you hedge it for a million years, you're going to be out the frictional cost probably of doing it, unless you're smarter than the market generally on diesel fuel. And if you're smarter than the market on diesel fuel generally, we'll go into the business of speculating in diesel fuel. I mean, if we really got an edge, why bother to run the trains? Let's just speculate in diesel fuel. But I also say, they've got and if you have an organization where you have somebody in charge of that activity, it's going to take place. On the other hand, Matt Rose has done a fabulous job, as well as his management team, in running Burlington Northern. And if they are more comfortable, or they find it useful in any way in terms of pricing contracts or anything, to hedge it, that's fine with me too. I mean, it's his company. He can figure out the best way of running it. I'll hold him responsible for how it does over time. And I wouldn't do it one way and somebody else would do it another way. I don't think I would not condemn anybody that's running a railroad for hedging diesel fuel, nor would I condemn anybody that runs an energy company like we do at Mid-American for hedging energy costs in certain ways.